Hey guys, welcome back. Well, I don't know if you're like me, but I am thrilled to be finished with July and enter into August. July was just let's face it, an awful month for us tech investors, for us memory investors. We had so much volatility across the entire month. In fact, last week, there was so much volatility that I was exhausted. The memory stocks were up, they were down, they were up again. We saw the big tech earnings and we were on the edge of our seat waiting for those earnings and the signals that were coming out. And thankfully, they were all positive for the sector. But then we had the unraveling of the situational awareness fund, that over-leveraged fund that held so many positions in the stocks that we follow. The number 2 or number 3 position was SanDisk. So that had huge implications across the memory sector, across tech sector. And we saw those short sellers get squeezed on Thursday, the profit taking on Friday. It was a ton for us to kind of experience and to work through last week. I'm glad July is over. Let's get into August. Let's start again. Let's see if we can get into a bull run with these stocks, the ones that we love on this channel. Let's see if we can start posting some green numbers again in our portfolios. So I want to review some key demand signals that I saw over the weekend that I think just give us a strong outlook, a strong conviction for the real demand that's in the marketplace right now, because there is a huge disconnect in the market right now between where the stocks are priced based on everything we saw in July and the real economy demand that we see in the market, the real demand around this AI infrastructure build out. So there is a catalyst. This week is a catalyst as well, because we have massive earnings as well. It wasn't just the hyperscalers last week. This week we have AMD, we have Arista Networks, Astera Labs, and then we have 2 of the Fab 5 on Wednesday with SanDisk and Western Digital that will just tell us everything that we need to know about the sector, about the AI infrastructure build out, about the demand that we see with compute, with connectivity. There'll be so many great things for us to cover together on this channel. So make sure you stay tuned all week. I'll drop it all each and every day, covering every bit of signal that we see in the market, the good, the bad, and what it means for us investors. But today, I want to dive into what we saw that came out of South Korea, their July export data. What did it show us? What type of demand did it show us for the memory sector? Are we continuing to ship, or is South Korea continuing to ship semiconductors at a high rate, just like they did in June? Remember, June was their highest month ever, 102 billion in exports that came out of South Korea. And then we'll go through the Kioxia earnings that dropped. Their Q1 earnings, because guys, Kioxia is probably the closest proxy to SanDisk. So what did it tell us? What did their earnings tell us that we could then extrapolate over to SanDisk? Give us a little bit of insight of what SanDisk is going to drop on the street on Wednesday. Because for me, I think it's going to be massive. I think their earnings are going to be monstrous. It's going to show the demand that this company has. Hopefully, it'll move this stock back in the right direction. We know it is priced to perfection right now. We know in this market today, it just takes massive earning numbers, massive forward guidance to move these stocks. So that's what I'm hoping SanDisk drops on the street. And then finally, I want to go through the next bottleneck, the signal that the Lumentum CEO told the crowd at the Rise Summit in Paris this past weekend of what he is seeing right now as the next big constraint in the marketplace. It's as big as the DRAM, as the memory constraint, according to him. So we'll go through that together, because I think there may be some really strong entry points for us with the optical players right now, based on all the price action that we've seen in July. So that's everything we're going to cover in today's video. If you haven't done it already, then make sure you hit like, make sure you subscribe to the channel. Let's see if we can get this channel up over 40,000. I've been asking for it for the last few videos, but we need to see the explosive growth with tonight's video, just like the growth we're expecting to see this week with SanDisk. Let's get this channel up over 40,000 subscribers. So if you like this content, if you like the channel and you haven't subscribed yet, do me a favor and just hit subscribe. All right, let's get started. Let's dive into what we saw come out of South Korea with the July export data. You can see South Korea's monthly exports, they hit the second highest ever on strong chip shipments. As I mentioned, last month, June, was the highest on record ever, 102 billion. This month, not too shabby either, 99 billion in export data in July. You can see that top line, second highest ever. They moved up 63% year over year. And it was all driven by global demand for memory chips. So the outbound shipments came to 99 billion in July, and it's slightly below the all-time record of 102 billion that they saw in June. And the exports by semiconductors, the backbone of Asia's fourth largest economy, shot up by 179% over the period to 41 billion as global prices for memory products remain high amid the strong demand for artificial intelligence data centers. If I scroll down, you can see where they ship to. The two biggest, not surprised, China and the U.S. Exports to the U.S. surged by 69% to 17.4 billion, driven by AI data center investment projects rolled out by major high-tech companies, the data showed. So this is a clear signal that we are not slowing down with the shipments in July. Data centers are not slowing down. We saw that with the capex from the hyperscalers. They are continuing their investment not only in this quarter, but into the next quarter as well. And we're seeing exports moving out of South Korea, which is probably the most important country in the world with regards to semiconductor. You know, outside of Taiwan, South Korea, I would say, is right up there as one of the most important countries in the world. So when we're seeing those numbers hit like that, it shows us that chip exports, they didn't just edge high. This proves that hyperscalers aren't pulling back on physical deployments. Hardware is flowing out of factories and into the data center racks at an unprecedented pace. The pullback in stock prices that we saw across July wasn't caused by a drop in physical demand. It was driven by short-term institutional repositioning and liquidity overall. And that brings us to the memory pricing power that we saw in Kioxia's kind of massive print as well. So if I jump over to Kioxia, you can see what they dropped in their first quarter. So their gross margins hit 80%. They reaffirmed the 50% long-term agreement target for 2028. But let's walk through some of the other numbers. So they announced their fiscal 2026 first quarter results today. Reporting revenue was 1.767 trillion, up 76% quarter over quarter. And guys, 415% year over year, exceeding the company's guidance. Gross margins for Kioxia reached 80%, while operating margin rose 70%. Now, their net profit for April through June quarter reached 842 billion. It fell slightly short of market consensus, and that's why the stock pulled back a little bit through these earnings. But we cannot kid ourselves. These are unbelievable earnings. When you see a company that is driving 415% year over year returns for their revenue, it's phenomenal. And what the company said is that the widespread adoption of agentic AI is driving strong NAND demand growth, which it believes is still in the early phases. It also highlighted progress on its long-term agreement strategy, saying it remains on track to secure 50% of its LTA volume coverage for calendar 2028 with key customers. A few other things I want to call out here is around the sales for data centers. So data center sales reached 1.17 trillion in the April through June quarter, 5 times higher than the year earlier. And the company generated as much revenue in this quarter as it did during the entire fiscal year that ended in March 2026. Kioxia said that NAND demand continued to outpace supply, driving a roughly 70% quarter over quarter increase in average selling prices, while bit shipment growth remained in the low single digits. It also expects demand to continue outstripping supply or outpacing supply in 2027. So those are strong numbers from Kioxia. And as I mentioned, that is probably the closest proxy to SanDisk. So what does it look like? What did those results do for SanDisk in the after hours? What we're seeing right now is SanDisk is moving by about 3.5%. You can see where we closed on Friday, down 5%, sitting at $12.14. Well, in the after hours right now, we're sitting at $41 back on the stock at $12.56, just jumped up to $12.57. So about 3.5% right now based on everything we're seeing, whether it's the demand that's coming out of South Korea, what Kioxia dropped on the board, kind of that, losing that leverage position and seeing that those positions move over to Citadel, and what that did for the stock overall just got rid of this overhang supply that we saw in the market. But we're also seeing the same type of movement with Micron now as well in the after hours. Micron is up by about 2.5%, $20 at $8.43 a share. And if I look over to the right, you can see Western Digital is moving up by about 2.4% at $5.57 a share. Also, Seagate is up by about $18, another 2% at $8.74 a share right now. So things are looking really good in the after hours as we head towards the opening bell on Monday. Let's hope we continue that momentum throughout the evening. Let's hope it gets even stronger as we move throughout the evening. But I'm looking forward to seeing SanDisk earnings, because what Kioxia just dropped, I think SanDisk can do it or even better overall. I think we'll see gross margins like 80% as well with SanDisk. I think that's the level of earnings we'll see. I think the guidance is going to be astronomical as well for the next quarter. So that's what I'm hoping for. That's what I hope to see. But those two signals to me were clearly strong signs and give me more conviction for the sector as we move into August. But let's talk a little bit about what Lumentum's CEO dropped at the Rise Summit. And I want to pull up this article for Tom's, and you can, from Tom's Hardware. You can clearly see the Lumentum CEO warns of an impeding bottleneck on critical material used for silicon photonics. Fab and material shortfall already lags 30% below customer needs as co-packaged optics demand skyrockets. So if we go through a few of just in this first paragraph, you can see the CEO, Michael Hurlston, told an audience at the Rise Summit in Paris earlier this month that indium phosphide, the compound semiconductor behind every laser in the AI data center, is heading into a supply squeeze worse than we've already seen with DRAM and NAND. And that was why NVIDIA made a decision to fund both Lumentum and Coherent at the same time, was a response to exactly that. He mentioned that Hurlston said that telecom customers bought lasers in the hundreds, while NVIDIA and the hyperscalers are asking for hundreds of millions. And while Lumentum runs 5 indium phosphate fabs, it's still shipping more than 30% below what customers want. NVIDIA's answer was they invested $2 billion checks in both Lumentum and Coherent, so hopefully to ensure that they have supply as they need to move. This is all based on kind of these concepts of scale across, scale out, scale up, and scale in. We know the copper wall is coming down. Right now, we're in the process. We've already seen the scale across and the scale out, but this is all focusing on that third bucket, which is the scale up. This is what we need to see right now when scaling up is inside the rack. This has historically been where copper cables have dominated. But when you move to 1.6 terabit speeds, GPUs, they draw immense power, creating extreme electrical resistance across copper wires. Copper literally chokes on its own heat within inches. So Hurlston, he predicts that copper will begin to exit the server rack over the next 12 months, forcing a massive shift towards in-rack optics. And that is the physical wall. The physical wall is because silicon cannot laze. NVIDIA can design faster chips. TSMC, they can build new CMOS fabs, but standard silicon physically cannot generate laser light. Unlike NVIDIA, which outsources fabrication to TSMC, optical leaders like Lumentum and Coherent must build and operate their own internal indium phosphide fabs. Fabs take years to build, just like we see in memory. The yields here are tough, and the global capacity is utterly maxed out right now. So when optics move inside the rack to replace copper, unit demand just doesn't grow marginally. It jumps from thousands of units a quarter to tens or hundreds of millions of units. And that's why it's a massive bottleneck right now. Back to what Hurlston actually mentioned. There's a few things in this article that came out of the Rise Summit in Paris that I wanted to call out, because I think they're really important signals for us as we look at these optical players. He mentioned that he argues that the shift from copper wiring to fiber optics inside data centers is not a speculative AI bet, but a physics-driven inevitability. So within the next 12 months, he predicts that optical connections will begin replacing copper ether cables in a scale-up domain, driving volumes from tens of units a quarter to tens or hundreds of millions. The bottleneck is the manufacturing. Lumentum operates its own indium phosphide fabs, a capital-intensive model with multi-year lead times that cannot scale as quickly as CMOS foundries serving NVIDIA. If we go through some of the other comments overall, there was one piece that I love when he called out here, which is right around the bottleneck piece. So let me scroll down. Or it wasn't a bottleneck, it's the bubble. So we know it's a bottleneck. We know there's limited companies that can produce this equipment. We know they got pulled back significantly in July. But the question I think that any bearish person in this sector, in this kind of AI infrastructure would look at is this is all a bubble. Well, I love his comment here because he said even like addressing the question, his argument would be that the optical replacement cycle is structural. It's not cyclical. Even if new AI infrastructure spending plateaus, the conversion from copper to fiber inside existing data centers continues because physics demands it. Even if there are no more data center build out, as the CEO mentioned, if you don't see this crazy rate of construction that we've seen over the past 3 or 4 years, you're still going to have to shift within the existing properties from electrical signaling to optics. So that distinction is critical for investors trying to separate AI hype from durable demand. A company selling optical components for in-rack connections is not betting on AI model training continuing to double every 6 months. It's betting on the electrical properties of copper remaining the same. And that's a much safer wager, according to this author. As we scroll down, there's a couple other pieces here. There is a geopolitical tailwind potentially because, as it says here, the data center construction boom is overwhelmingly concentrated in the United States. And Lumentum's business, accordingly, is heavily weighted towards American hyperscalers. But we clearly see there is some Chinese kind of footprint within these data centers. So this is what the tailwind could be. It says the implication is clear. If policymakers decide that critical data center infrastructure should include mandated domestic content requirements, the competitive landscape could shift dramatically in favor of the US-based manufacturers like Lumentum and Coherent, as well as Applied Optoelectronics. This is not base case prediction, though, but it is a tail risk or a tailwind that most investors are not pricing into the stock today. So that is a sign that this could move like in a positive fashion. This bottleneck, if that policy was enacted, not saying it will be, but if it was, it would have a positive influence on Lumentum and Coherent. And also, indium phosphide also has applications outside of the data center. So it also, we know that SpaceX uses lasers for intersatellite links to build its internet constellation. Iron Dome that they have in Israel, that defense system uses high-powered versions to intercept incoming missiles. And even Apple's Face ID uses low-power laser projection to map users' faces. So this all has implication. What Lumentum and Coherent are building has more implications beyond just the data center overall. And if I jump over to take a look at Lumentum stock, we know it had a nice day on Friday. It was up 3%. If we see it in the after hours right now, it's up another 2.16%, another $15.50. So the stock is trading at $7.30 a share, we'll say. If we look over to the right, we know the range that it's had. We saw it get up over in, I think in the June timeframe, it was up about $1,100 a share. So will it get back again? I'm not sure. I'm just saying where the stock is priced right now, based on where we see all of the price targets in the market, which are about $1,000 a share for either Barclays, Citi, for CMB. They're all listing at about $1,000, if not a little more. So significant upside for where the stock says today. We see 21 buy, 4 hold, 0 sell across the 25 analysts that cover this company. So the question you have to ask yourselves, if you look at it, if you believe the demand that's in the marketplace, you see the CEO mentioning that we have a significant bottleneck in a component that only 2 companies manufacture for the AI data center builds out. We know we are moving from copper into lasers, into light, which these companies are foundational for overall. Is the price perfect for an entry point? That's up for your own individual decision. But I will say both Lumentum and Coherent are definitely undervalued from where they were. They definitely experienced some pullback throughout the month of July. And we're seeing them right now significantly below the 52-week highs that they hit, but also significantly below the price targets in the market. Coherent, you can see, was up 5.5% on Friday, another 2.5% right now, trading at about $270 a share. If I just look at the price targets for them, they are all in that 400 to 450 range. So again, similar, 22 analysts covering it, 17 buy, 5 hold. The overall consensus is buy with the average upside of about 50% for the stock that we see right now. So wanted to bring that bottleneck to you. That's what the CEO was calling out. But as we move into next week, guys, tremendous amount of earnings for us to cover together. We'll cover them all on this channel. I'll go through AMD, Arista, Astera. Of course, we'll go through Western Digital and Seagate, talk about what it means for the memory sector, talk about what it means for us as investors, but keep that bottleneck in mind. Remember that INP, that indium phosphide, and that bottleneck that it has in producing lasers as we shift and break down the copper wall and move to light and data centers. Hope you enjoyed the update. Drop your comments below. Let me know your thoughts, and I'll see you on the next one.